The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the parabolic short squeeze setup, a short video, and we'll also look at other markets that gave traders 3-session setups on the first trading day of a new month. Again, understanding yesterday's high and low, the importance of that. 3-day setups that we covered in yesterday's video, heading into our day 3 for a day 0 opportunity. And today, 3-session setups, first trading day of a new month. And again, coming back to understanding Monday's opening range and initial balance. The importance of understanding yesterday's high and low gives us a couple of perspectives. Many traders pursue that with the understanding that it's about hitting stops all the time. And what we can often find at these other levels is that other time frame traders may be driving these moves. So when a day closes, I'll remind every trader, when the new day starts, we have 3 levels that the market can be trading from, or to, or through. That's yesterday's high of day, yesterday's closing price, and the previous low of day levels. These are 3 levels. Now, specifically closing price, when the new day begins, we get a new auction process happening that starts to make, in our Asian session, our opening range. We can expand that range as the new day trades in London and Europe. And we can get a range expansion. So when we're inside, this is what I refer to trading to traders to avoid trading inside. Now, this is different than looking for a market that potentially may be coming from an existing trade already, where we have a new day closing, we have a parabolic opportunity potentially building maybe in the London session for a move from closing price to low of day. We can get a failed opening range breakout and a parabolic move in the London session that may eventually pump back up for a low-hanging fruit continuation in our U.S. window. There can be different scenarios that will play out. Today, though, we're going to be talking specifically about markets that offer 3-session setups with failed breakouts. We have a new timing cycle, the beginning of a new month. And so when we have a market that auctions out our opening range and our initial balance, we may have a failed breakout and then major red news in the U.S. session that gives us a parabolic opportunity after major red news has been released. We have a failed breakout in either our Asia or our London window, and aligning ourselves with our universal entry criteria right from the playbook. Again, as we talked about yesterday, the basic model for all trade entries, that was to remove analysis paralysis. And if we don't have a parabolic setup aligning with our other time frame traders, and I have a market that's trading inside of a range, typically I will look to avoid those markets. Now, we may have a range in an index or an instrument that gives a range expansion, doesn't quite take out a level, and traders will be trading inside. And as long as you understand that that is your risk reward area from high to low, low to high, as opposed to potentially maybe a parabolic setup, the risk reward range needs to be lucrative enough for me to want to take that, which in most cases would want to be at least 75 to 100 pips, depending on the market, because that at least gives me an area where
if I'm trading inside, at least I can maybe at least get a 50 pip parabolic move, as we saw in some of the indexes. And the volatility obviously is different on those instruments. So with those types of days, I want to be darn sure that I have a trade setup that's going to capitulate quickly and not be sitting in a choppy, wicky market trying to guess which way to go. So I'll repeat this again. I'm looking for setups that come off the levels. I'm not looking at little zigzags up and down, trying to figure out how many pushes I'm getting on a 1 minute or where the gap is that I'm going to trade back up into and figure out where my trade is for 20 pips. I'm looking for opportunities, like Paul Tudor Jones says, that maybe at minimum are 5 to 1. Now, I'm not always going to get those, but I'm going to target an instrument where I've got a 90-10 probability that I'm going to go on a parabolic move for 40 to 50 pips. If it's 25 on a low volatility instrument and it's 90-10, I'm still going to take the money, lock it in, and get off the screen. Which brings me to just one little point about I'm looking for setups that offer me a scalable rinse and repeat opportunity. I'm not looking to try and trade all day long and catch as many pips as I can. I want to trade as little as possible on 90-10 opportunities as large as possible. Now, Thursday we had on British pound pairs, we had the Bank of England monetary official bank rate release and Governor Bailey speaking 7 a.m. and 7:30 a.m. Then at 8:30 a.m. we had unemployment claims. 10 a.m. ISM manufacturing on the U.S. 11:30 a.m. Bank of Governor Macklem spoke as well. Now in this particular type of setup, I'm looking for markets that have activated other time frame traders on the day, either underneath, on top, or even into those levels that show me there's been selling, other time frame sellers step in, or buying, other time frame buyers stepping in the timing window as we're heading into our session open. We'll run through a few different pairs today, specifically the major pairs. Gold, we'll take a quick look at the indexes and identify pairs that activated other time frame traders. Now, the Japanese yen was in breakout at the close of Wednesday, a market that closed out of balance. We had a peak formation, low, peak formation, high. And as I've mentioned to traders, typically one of the previous day's high or low levels will be established by a session peak formation, which brings us to later, after our last major red news is released, we have a short signal. This is a 5-minute time frame, taking traders back through to the low of the day. We have the engulfment after major red news inside of our universal EMA. Depending on where traders took their profits, this trade offered 50 pips of zero stress, no heat, in line with our thesis of staying in line with other time frame traders. We have a market that's in breakout. Other time frame sellers are driving this move. We've traded up into closing price. So as I mentioned in the earlier video, if you use closing price as your reference point, traders who are short at the close of the market are still in the money the entire day, other than a few brief moments of popping back up into the breakout level from the previous low of day level from Tuesday. Short sellers are in the money, and that continuation move is a low-hanging fruit blow-off for 50 pips. Low-hanging fruit trend continuation trade, page 96 in the playbook. Canadian dollar broke out, traded sideways before collapsing at our New York Open, trading back down to the low of the current day and our major red news release with lower lows on the inside. The consolidation 45 minutes into that hour after major red news for the continuation parabolic blow-off on the Canadian dollar. If traders exited the trade at the low of the Fed, the FOMC release, that netted traders between 40 and 56 of zero stress, no heat, parabolic opportunity. The euro broke out in the Europe-London window before reversing and taking out the high of the day heading into our U.S. first hour, pushing higher at our New York Open than our major red news release at 10 a.m. And after the major red news release, positioning ourselves in that continuation trade in line with our universal EMA for a coiled range expansion opportunity, netting traders between 40 and 50 pips, again, depending on their fill after the news of zero stress, no heat, free cash. British pound broke down from the high of day through closing price outside of the previous day's low of range, a higher high on the inside. Heading into our US 12 candle window before dumping down, we had our major red news release and the reversal coil inside again right after our major red news release. 25 minutes after the news for a parabolic range expansion opportunity. Closing price to low of day give a full range expansion, which again projected through the previous high of day. So we have a failed breakout and then the reversal to the opposite side for a 100 pip parabolic reversal. Again, just simple breakout, failed breakout, consolidation after major red news in line with our universal EMA for a parabolic reversal opportunity on Thursday, day 2. Swiss franc, we triggered other time frame traders into the market before breaking down on the inside, lower lows heading into our US 12 candle window. We had the lower low again before the major red news release in line with our thesis of a descending triangle and a pump and dump template. We have the short trade 45 minutes into the third hour for a parabolic blow-off and a range expansion profit target opportunity on the Swiss franc for at least 40 pips of no stress, parabolic, free cash. Gold offered traders a first bar opportunity after the 8:30 a.m. major red news for a move right back to the high of day. Traders who re-entered that continuation trade after major red news were also targeting a measured move range expansion of closing price to low of day, which gave 300% expansion of the original consolidation down low. Now this trade on gold mirrors pretty much to the T a textbook examples right out of the playbook. One of the examples I cover in the playbook is on oil. It's very similar, exact same type of dump and pump scenario, different time frame, but the exact same type of template. Another one on the Canadian dollar, 3-day short squeeze setup. Now we saw this on gold. And in this example underneath is evident that other time frame traders were driving this move. And I want to come back and just point out that Monday's the opening range. Monday's the opening range. We made higher highs and we had failed breakouts Tuesday and Wednesday, but Wednesday closed outside of the range as an out of balance close. It closed outside of the range. So coming into the day, we had a rising front side of the move that could indicate a trend line break. So we could either have a trend line break retest or a reversal potentially for a failed breakout. Now, one of the other things I want to point out, and this is a 1 hour chart, is that we have wicks down below the bottom and we have other time frame traders underneath that have been buying underneath of this area. So they're either going to get trapped, and we'll see that market potentially retest the closing price from the previous week, which acted as our auction point at the start of the week, or we have a larger dump and pump template heading into our US session. Revisiting the first bar concept, we had higher highs on the inside. And just prior to our major red news release, we had a higher high. That clears out all the lower level shorts. And that first bar completely closes above all that volume, trapping anybody who's short underneath of this area. But more importantly, when the hour closes, we are on top of closing price. Now remember what I said earlier. If you were a buyer of the close, at the close of that first hour, you're back in the money. If you were a buyer of the close at the close of the day, you were underwater when the market came underneath. You're back in the money. If you're a seller above closing price, you are now underwater. The market goes parabolic in the second hour into the high of day before stop hunting, second hour shorts, and then going parabolic into the third level. I also pointed out to traders that we had a measured move potential distance. If we take one measured distance down to the low that market traveled to, and then we project that back on top of the existing, originally I had it at the high of the day, but we could almost project that on top of the high of day, and it takes us one measured expansion above the high of day that it went below closing price for a very rather profitable opportunity for traders who were positioned into that short squeeze opportunity on gold. Now, oil, similar to the video we spoke about yesterday about range expansions. So we had a range expansion on Wednesday. And if I just mark off our last highs of our breakout candles that closed out the day last day driven by other time frame sellers as a potential reference area as the new day trades and sets up. Asia sets our opening range. We have lower lows now. We have a range expansion on the downside in the London session before making higher highs heading into our US window. Higher highs first hour, expanding the range again. The market stays in consolidation, but traders will notice that we have 1 hour up, 2 hours up, and a third hour up. This is a later session move. We have pins on top into other time frame sellers. If that our thesis is we're pushing up into the high of the day for a sell-off with lower lows on the downside or range expansion. If you're not sure what that means, watch yesterday's video. Although this was later in the session, I'll point out to traders that this 5-minute chart on oil acts the same as a first bar trade opportunity, as everybody above the close of that candle is now trapped above, which means this market will not come back above that level, or it lets traders out of losing trades. On a smaller time frame, on our 1 minute, obviously traders had the opportunity, if their thesis was in line with that sell high opportunity at the rotation of the new hour, traders were able to be patient. The parabolic move as it coiled inside of our universal EMA. And again, oil, for traders that aren't used to trading it, potentially not the best day to be trading it, but we had other time frame sellers in the market driving this move. DJ30, the only index that actually tapped into a previous low of day or high of day level. I'll show the different ones quickly. But this chart is the exact same as the Japanese yen on Monday and oil from Friday. Different parts of where they play in the template, but the same type of template where we have range expansion, second hour. Because we have 10 a.m. news, we just redraw those levels. The market on major red news pushes higher and expands the range again. That becomes our new high before dumping down into the low of the day. Now, higher highs on the inside means we could be getting a dump and pump template, which traders, if they were patient, this took into the fourth hour, but again, third hour news moves everything back potentially an hour or so. We had the reversal and then the parabolic reversal opportunity on Thursday, which is almost endemic when we get the large parabolic collapse and the sideways consolidation. The parabolic reversal opportunity came later in the day on the DJ30. Thesis again, this trade is being driven by other time frame traders. If we come back and just back this chart up and look at the overall week, we've been in an up market. We had a market that broke out from Monday's high, and we've layered on top, the last Monday's high that is, layered on top. We potentially now have a dump and pump Wednesday, Thursday, Friday setup, which could lead us into some interesting scenarios after non-farm payrolls tomorrow. We now have a break in structure, break of a daily level on the downside, which means we have a lower low on the inside. Still offered traders a fantastic parabolic opportunity for later in the day for a parabolic blow-off through the high of the day and the high of the week. The high of the month actually now on the first day of a new trading month. And the NASDAQ, again, a late in the day parabolic blow-off through the high of the day, the high of the week, in line with being driven by other time frame traders coming in near the low of the day level, but having not broken that level, DJ30 was the only one that really I was sort of watching, not interested in trading after the gold trade. That was it. But there were opportunities on other pairs. For the length of this video, we won't cover every single cross rate pair or anything, but there were several opportunities today for parabolic opportunities after major red news, just sticking with the basic model of the playbook being in line with our high of day, low of day levels and our universal entry criteria. Traders, keep it simple. Stick to the simplest, highest probability opportunities. Keep getting better. Congratulations to all the traders that did nail those trades. You don't need to hit every trade. You don't need to take 5 trades. Take 1 or 2 trades at most. Focus on flawless execution, how you may have sized more into the winning trades or the best opportunities, where to take profits, where to make sure that if that market is starting to show any signs of reversing, to be locking in profits and then getting off the screen. Have a great day, traders, and may the markets go with you.